In today's weekly Forex forecast, I'm talking about the DXY, the Euro, the Pound, the dollar versus the Swiss franc, and also gold. I'll show you the key levels I'm watching and exactly how I'm trading these markets as we head into June. Now, this video is sponsored by XM Group. I just partnered with them, and for a limited time, when you deposit $1,000 or more using my link, I am going to give you lifetime access to our VIP group. That includes my trades in real time, also my trade ideas, exclusive videos, and also the course that I just put out. So check out the link in the description of this video. Sign up with them and deposit $1,000 or more, and I will grant you lifetime access to our VIP group. So it's a great way to earn while you learn. Okay, so let's go ahead and jump right into it, guys. Looking at the DXY on the daily time frame. So here you can see that the market did test an area that we covered in last week's forecast, right around 100.2. So you can see here that we had this gap up on Thursday. And the reason for this was the reports from the Supreme Court basically blocking Trump's ability to impose tariffs. Of course, markets freaked out. We saw the dollar gap up, stock futures went crazy overnight, and all of it got erased within 24 hours. So this right here is resistance, regardless of that gap up. We can see the market did sell off right there from that area that we talked about. And we've also got these lows down here around 98.9. So this right here is going to be your key support going into next week. We've also got obviously 100.2 as resistance. And as of right now, guys, there is no sign here of a reversal. So there is no reason to be bullish on the US dollar. This is what we've talked about at length in recent videos, simply because we do have an established downtrend here, lower highs and lower lows, and there is no breakout here. Even this trend line that we've talked about in recent videos, you can see no breakout here so far. So even though there is the slight potential that we have a higher low developing, we don't know that yet, because the only way that you can get a higher low in a market is with confirmation, and that confirmation has to occur on a breakout. Okay, specifically, you have to see the DXY trading up here, reclaiming levels like this around 100.2 to get that confirmed higher low. And this is the mistake a lot of traders make. They see this right here and they assume that this is going to be a higher low. But the issue there is that you could have done the same thing back here, right? This low right here, you could have assumed, okay, well, that's going to be a higher low for the DXY, and you're buying through here only to see the market move lower. So you need that confirmation, that follow through to the upside to really confirm that a bottom is in. And again, right now, we don't have that. So as of now, guys, I am looking at lower prices for the DXY as long as the market is within this downtrend, holding below that resistance area. Now, one thing that we've talked about in previous videos as well is this area around 97.7. So you can see all these lows back here. Back here in, let's see, this was early, what was this? This was early 2022, I believe. Yep, March 2022. You can see we have all these lows right back here in this 97.7 area. So a very precise level from 2022. And the telltale sign here for the DXY, we've talked about this before, but look at this April low. You can see where the market came down here close to this level, okay, but didn't quite test it. Now, that might seem insignificant, okay, and it could be. However, a lot of times when I see this, when you have a very precise level at a level in an area like 97.7, and you get the market coming down here into that level, and then not quite testing it and bouncing. And then you see the market starting to look weak, okay, starting to push back down toward that level. A lot of times what you do get is a retest of this area and a sweep of this low. So no guarantees, obviously, but as long as the downtrend is intact and 100.2 is intact as resistance, really, again, there's no reason to be bullish here on the US dollar. And, looking at this support area down here, if this were to break, if the DXY were to get below here on a daily closing basis, then you're looking at 97.7. Okay, so obviously this could change next week. This could be a higher low, but again, we need that confirmation above 100.2. So really, bottom line, at the end of the day, this is really just a range-bound market here for the DXY, currently between 98.9, so support down here and resistance up here as we head into June. Obviously, break below 98.9, and we're looking at 97.7. All right, so let's flip over to the EURUSD, and if you guys are enjoying this content, subscribe to the channel, and also don't forget to smash that like button. This takes me hours to put together and a few seconds to show some love and like it and subscribe to the channel, so be sure to do so right now. So looking at the euro, we do have the market actually holding a breakout that I talked about in previous videos. So even though the market has been incredibly messy, and make no mistake, guys, the price action ever since mid-April, back here since the market got above this area, it has really just been incredibly choppy. Even this move lower, you can see how choppy this was through here. And even this, okay, very choppy. So you've got to be careful out there right now with the euro, with all of these markets, because you can really tell that the indecision, or the unknown, I should say, between US and China trade talks and Trump and everything else, guys, is really weighing on these markets. I'm not a fundamental trader, but I don't have to be to know that this right here, this indecision from the price action, is traders not really knowing which way to go with all the information out there. So looking at the euro, though, you can see where last week actually did hold above this key area. So we talked about this bull flag in previous videos, where you can see we had a very aggressive move up, impulsive move up. We had this correction into a descending channel, also potentially a bull flag. And so far, even though last week's price action was incredibly sideways, the market started the week here, ended the week here. I mean, pretty much just sideways all week long. Even though that was the case, you can see where on Thursday, this candle, we dipped below it during that news about, the Supreme Court blocking Trump's tariffs. And you can see where the market actually closed Thursday's candle well up here. So this was a bullish candle holding above that 112.75 level. So as of right now, guys, this bull flag following the breakout back here, so breakout here, retest last week. So as of right now on a daily closing basis, even though this is very sideways, the euro is technically holding this breakout. Now, if this continues to hold, we're looking at resistance like 114.25, 115.30, and 116.50 or 116.60 or so. So if this breakout holds and if this bull flag continues through to completion, the measured objective for this, okay, we talked about this before in another video, but I'll do this quickly here from this low down here to the high up here of the bull flag. If we take this same height, okay, and measure it over, copy this over from the low down here. Remember, with a bull flag, you're not measuring from the breakout, you're measuring from the low. If we do that, you can see that we get an area up here right at 1.19. Okay, so right on the dot. Now, if we take that same level and we zoom all the way out here, going back to 2021, what you're going to notice is that we have two equal highs, okay, from right back here in 2021 that line up right there with that potential measured objective. Now, objectives like this are not guarantees. Okay, there's no guarantee that the euro comes up here and tests this level. But I do think it's interesting that the objective of this bull flag does line up with an incredibly significant level from 2021. Okay, so definitely something to keep an eye on over the coming days. As long as the euro is above this area down here on a daily closing basis, then we have that potential for higher levels. Now, of course, if the euro were to fail here and the DXY were to reclaim levels like 100.2, then this right here would be a failed breakout and we could get that turn lower. All right. But as of right now, guys, we do have an established uptrend here, no change in that. And we do have the market holding above a breakout level from last week. Okay. So let's turn our attention to the pound here, GBPUSD. And like the euro too, we also have a breakout that occurred back here on this candle on May 23rd. So you can see here that 134.30, this high from back here in September, we had the high over here in April. This led to a 300 pip drop. Now, we had the breakout here recently, and so far the pound is holding above this. So this right here now gives us 2 weekly closes above this key level. So all in all, guys, like I mentioned in last week's video, even though this could have turned out to be a failed breakout, and personally, I would have preferred that just because that's the way I trade, or at least is my preferred way to trade markets. Even though that could have been the case, we had to respect what was on the chart, and what was on the chart was the market holding above this key level. So as long as this is the case, we do have a high time frame breakout, we have a retest of new support, and we also have an uptrend that has been around for months. Okay, so with that in mind, we have some resistance levels here to watch for the pound. And the way I got these, I've shown this before, but you can see that back here, we do have levels like this over here and this one up here. So this is early 2022. And you can see where 136.30 and 137.50 are two key levels to watch if we do get that follow through in June. Okay, so if this market continues higher, those are going to be our resistance levels to watch. Okay, so we've got 136.30, 137.50, and also 138.70. This would be the objective, okay, similar to the euro on this bull flag that we talked about. Okay, so the objective here comes in up here in this area. Now, if this does fail, if the pound gets below here on a daily closing basis, this becomes a failed breakout. We're looking at a move back here toward the top of this channel and potentially 32. All right, so it's as simple as that, guys. But we have to respect what's on the chart. I say it all the time, but we can't trade what we think might happen, right? We can't sit here and say, well, I think this is going to fail, so therefore I'm going to short it, because you would be shorting right into key support and also within this uptrend. So you have to respect what's on the chart. And right now, the pound is holding above key support. All right, so the dollar versus the Swiss franc, really not a whole lot happening here, guys. No real momentum here, similar to the euro. However, I did want to cover it because the levels here are so incredibly clean. You can see that Going back here to these lows, you can see where this was the exact high on this candle. And you can also see where these highs back here, these lows, look what was resistance last week. Okay, again, this was that Thursday gap up from the US dollar, and the market came right back here into key support. Okay, so 82 is going to be key support, 83.30 resistance. Get below this down here, you're looking at a move back here toward the low around 80.40. Okay, so again, no real momentum here. However, it is a range-bound market, and also the levels are incredibly clean here. So if you're looking for a market with really clean levels to play in the week ahead, going into June, this could be, certainly one to watch. Now, one thing I'm going to say about this before we move on is if you'll notice here on Thursday, okay, last week we did get this very long upper wick, and so far we haven't really seen a retrace into this area. Now, I don't know if we're going to get that, but typically wicks like this do tend to fill. Okay, now it doesn't mean it will happen immediately, but it is something to pay attention to, because if next week we were to get a retrace, the DXY moving back up there to retest resistance, this market moves up here toward this 83 area. This could trigger that move back here toward range lows. All right, so just something to keep an eye on with this upper wick from Thursday, because again, this could prompt at least a temporary retrace into this area for the US dollar. All right, so let's wrap up with gold, XAUUSD, and you guessed it, this market has also been very, very sideways here for the past couple of weeks. Really not a whole lot going on. Now, we've talked about this bull flag as well from gold, and the difficult part with this market is that it looks like we did get a failed breakout. So if you see here off of this upper level, we talked about this before, but you can see that off of this level up here, this high, we had this high through here, we had a slight breakout over the course of two candles, closed back below, and now it's resistance. So what I mentioned last week, guys, was that I was short through here on this retest. Okay, so this candle right here, the retested, I was getting short, and I'm actually still short. Okay, I have my stop loss above this high up here, well above this high, and I have a mental stop or a soft stop on any daily close above this area back here, right at 33.20. Now, the reason I stayed in this is because my mental stop is on a daily close above this area. And you can see where Thursday did not close above this. Okay, so there is still the potential for gold to move lower following this slight failed breakout from a couple of weeks ago. However, the issue here is that once again, you have a very sideways market. And we also have a US dollar that looks, relatively weak. And typically gold and the US dollar do tend to move inversely to one another. So it is all a bit confusing, if I'm being honest right now, with, as far as where gold goes. But I'm also one of those traders where once I commit to a position, I'm following my rules no matter what. And so far, the market has not taken me out. Okay, so if gold does, close above here, then I will be out. Okay. Also, my hard stop is also up here above this high, like I said. And if we get that follow through, of course, then we're looking at a return to this area around 32.40 and then potentially down here toward 31.30. Now, I will finish up by saying that there is, reason to think that we could get a pullback from gold or a further pullback from gold simply because we have this pocket down here. If you'll notice, these two candles were incredibly aggressive. And even though we saw this retrace here, this candle back here, okay, and much of this one have not been retested. Okay, and it doesn't mean that it will happen, but this is still an imbalance down here in this area. So, bottom line here, guys, I am not fully convinced that we get the move lower simply because of the way Thursday's candle closed, but Friday's candle, kept me in this with the market staying below this area. So I will most likely, and I'll be sure to update VIP members. That's the advantage of being in our VIP group. But I will be sure to update members, based on what's happening here. And most likely, I will be moving my stop loss down, my hard stop down to, above this high. Okay. So basically, at that point, if I move it above this high, I've got it over here. I'm essentially in a risk-free trade, considering that I manage the position size based on an entry here and a stop loss up here. Okay. So, at that point, I'm fine taking that risk for the potential move lower. All right. So, again, guys, for gold, it is a bit indecisive right now with this sideways action. You could make the case that this upper level is higher up. However, it then gets a little bit confusing because these highs over here don't line up. Okay, so again, it's a little confusing, but right now I am going with the interpretation that we did have a failed breakout last week. All right, that could change. And I'm also still in my Bitcoin short too, just as a side note, from 111K, which is going, very well. So Bitcoin right now down to below 105. Okay, so I'm also in that trade too that I also shared in VIP. So those are the only two trades I have on right now. Basically, both are in profit. Gold is slightly in profit. Bitcoin is well in profit. So I'm fine, just kind of managing this and trading it on a day-by-day basis. I hope this has helped, guys. Be sure to keep it locked in here. Subscribe to the channel, smash the like button, show your love. And also don't forget to sign up with XM Group. Deposit $1,000 or more using my link, and I will grant you lifetime access to VIP. Have a great weekend, and I will talk to you again on Monday.